Right now, in hangars and on flight lines across the country, there are airplanes with fresh logbooks. Not fresh as in low time used, but fresh as in the ink on the airworthiness certificate hasn't faded. The seats still have that particular smell of new leather that you only get for the first few hours before it settles in. And the tax shows numbers so low they're almost embarrassing. These airplanes were bought in 2022 by real, qualified, genuinely enthusiastic pilots. People who had been waiting years to own their own aircraft, who watched the pandemic reshape their priorities, who looked at the world in 2021 and 2022 and decided that flying wasn't something they wanted to keep putting off. They bought airplanes, real ones, significant purchases, and a meaningful number of them are now quietly, sometimes reluctantly, sometimes urgently, putting those same airplanes back up for sale. This isn't a small story, and it isn't a simple one. It's not about buyer's remorse in the casual sense, not really. It's about a collision between a very specific moment in history and a very specific set of conditions in general aviation that lined up in a way that pulled thousands of people into aircraft ownership, who weren't as prepared for what that actually looked like on the ground as they were prepared for what it felt like in the air. Understanding why they bought, what happened afterward, and why they're selling now tells you something genuinely important about where this market is headed and what it means for everyone still in it, whether you're a buyer, a seller, an instructor, a lender, or just someone who owns a hangar full of their own complicated feelings about general aviation and what it actually costs to be part of it. Before we dig into all of it, hit subscribe, because this is the kind of analysis of the general aviation market that most people in this space don't take the time to walk through properly. We're going to cover the economics, the psychology, the insurance situation, the maintenance realities, the medical certificate picture, and what's actually happening to those 2022 airplanes right now, in terms of resale value and time on market. This is exactly the kind of breakdown that matters, whether you're buying, selling, or just trying to understand where the market actually sits underneath all the enthusiasm. Let's set the scene first, because the 2022 purchase wave doesn't make sense in isolation. You need to understand the environment that produced it. The pandemic did something genuinely unusual to general aviation that is very easy to describe, but still underappreciated in terms of its lasting effects. It compressed the aspiration and the action into the same moment for a very specific kind of person. Think about who buys a personal aircraft in normal times. It's generally someone who has been thinking about it for years, building toward it, accumulating hours in rental airplanes or flight club shares, building the financial cushion, talking themselves into and out of it through multiple budget cycles, doing the spreadsheet math over and over again at the kitchen table at night until the spreadsheet finally says yes instead of not yet. The purchase, when it comes, is typically the result of a slow accumulation of readiness, both financial and practical, that happened over a long runway. The years of renting, the certification milestones, the slow build toward a down payment, the insurance call where the numbers finally made sense. All of that usually takes time, and that time spent building toward ownership is also time spent learning what ownership actually costs, in detail, from people who are already living it. The pandemic compressed that runway dramatically for a segment of the population that had the resources to act and suddenly, urgently, wanted to. Business owners who'd had a terrifying second quarter in 2020 and then watched their business recover faster than they'd dared hope suddenly had cash reserves and a radically realigned sense of what they wanted to prioritize. Professionals working remotely who'd always said they'd get their private pilot certificate someday discovered that someday had arrived because their commute disappeared and their schedule cracked open in ways it never had before. People who'd spent their whole adult lives postponing the expensive hobby they'd always wanted to pursue watched the world feel genuinely fragile for the first time and decided that the postponing was over. In 2021 and into 2022, flight schools were packed, check ride wait times stretched into months, and the used aircraft market, already feeling the demand pressure from that surge, got very, very hot. Prices climbed sharply. A well-maintained 172 that might have been a reasonable negotiation at $70,000 or $80,000 in 2019 was now trading north of 110, 120, sometimes higher, with multiple competing offers materializing before a seller had even finished photographing the aircraft. The same thing happened across almost every segment of the used market. Cherokees, Archers, older Moonies, Bonanzas that had been sitting at reasonable prices for years because the buyer pool was thin, suddenly had competitive interest. Sellers who'd been priced out of moving their aircraft started getting calls. Dealers who'd had hangars full of aircraft they couldn't quite push through at list price discovered that list price was now the floor rather than the ceiling. In that environment, a certain category of new buyer looked at the used market and made a decision that felt entirely rational at the time. They looked at a 10 or 15-year-old aircraft trading at prices that had historically been closer to what a much newer airplane cost. They looked at the maintenance uncertainty that comes with any used aircraft, the unknown previous owner habits, the logbook entries that raise questions, the airframe time that's just high enough to make you nervous about what the next annual might find. And then they looked at new or newer aircraft, and the math suddenly felt different than it would have in a calmer market. Why pay near new money for a 10-year-old airframe when the gap between that and an actual new aircraft had narrowed to something that started to feel manageable? Or, if not brand new, then at least something late model, low time, still under a manufacturer's warranty, with a known history and a clean logbook, and none of the anxiety of wondering what the previous guy did with it for the 300 hours before you. That logic was real. The market conditions that produced it were real. And the buyers were real. Something like 3,000 new aircraft found buyers in 2022 across the general aviation piston and light turbine segment, a number that was meaningfully elevated from the historical baseline and represented a genuine surge of first-time and stepping-up owners entering the market at prices and with financing terms that the years ahead were going to test very specifically. So they bought. Let's talk about who they actually were, because this matters a great deal for what happened next. The 2022 surge buyer was not a monolith. There were several distinct profiles within that group, and each one of them has a somewhat different story about why the airplane is back on the market now. But there are enough common threads that you can identify a fairly coherent picture when you look at the aggregate data and talk to the instructors, brokers, lenders, and maintenance shops who dealt with these buyers on the ground. A large contingent of the 2022 buyers were newly certificated pilots who had gotten their private ticket during the pandemic training surge and immediately stepped into ownership, sometimes before the ink on their certificate had fully dried. These were people who'd been genuinely bitten by aviation, who loved the training, who passed their check ride and immediately thought, I need to do this all the time, I need my own airplane, I cannot keep paying wet rental rates and scheduling around other people's reservations. That enthusiasm was completely real and completely understandable. What it sometimes wasn't was seasoned. Not in the sense of skill necessarily, but in the sense of hours on the ramp, of watching what ownership actually costs over a 12-month cycle, of experiencing the annual inspection bill that comes in twice what the shop estimated because of what they found once they got into it, of the hangar rent that feels totally manageable until it doesn't, of the months where weather and work and family conspire to keep you on the ground, and the airplane just sits there accruing fixed costs regardless. New pilots who bought in 2022 did so with a specific mental model of what their flying life was going to look like, and it was almost always a more optimistic model than the one that actually materialized. They planned to fly a certain number of hours per month, which translated to a per-hour cost that sounded defensible. What they discovered is that owning an aircraft doesn't work quite like that. The costs don't scale neatly with hours flown. The hangar, the insurance, the annual, the avionics subscription renewals, the oil changes that are due on calendar whether you've flown or not, these are fixed or semi-fixed costs that show up regardless of how much the airplane actually moves. When the flying life doesn't materialize at the rate the spreadsheet assumed, because real life reasserted itself, because the new business they started in 2022 got busier than expected, because they had a second kid, because they didn't love cross-country flying as much in actual practice as they'd imagined from the left seat of a rental during training, the cost per hour that made ownership feel justified starts climbing to numbers that become very hard to rationalize. Another significant piece of the 2022 buyer profile was the returning pilot, someone who'd flown seriously in their 20s or 30s, let it lapse for a decade or more while career and family consumed everything, and used the pandemic moment as the catalyst to come back. These buyers are interesting because they had real historical experience with ownership, knew what they were getting into at a practical level, and bought with their eyes open in ways that the newly certificated buyers sometimes didn't. But they had their own specific vulnerabilities in this market. The returning pilot who bought in 2022 often found that the physical reality of coming back to currency was harder than anticipated. Not impossible. Not even necessarily dangerous with proper instruction, but genuinely demanding in a way that a decade away from the cockpit tends to make things. Getting a flight review signed off is one thing. Flying confidently and regularly enough to feel like the airplane is a tool you actually command, rather than something that occasionally surprises you, is another thing entirely. And for pilots who discovered that the gap was wider than they'd expected, the enthusiasm for getting into the airplane started competing with the discomfort of feeling less sharp than their own internal standard. That discomfort doesn't always translate into, "I need more training." Sometimes it translates into a quiet withdrawal from flying that leaves an airplane sitting in a hangar and a monthly bill that starts feeling harder to justify. There's also a medical certificate dimension to the returning pilot story that became specific and painful for a portion of this group. Pilots who'd been away from flying for a decade were sometimes away for reasons that included health changes they didn't fully account for when they decided to come back. Aviation medicals are not merely bureaucratic checkboxes. They carry real weight. And a pilot who'd had a cardiac event, developed a managed condition, or accumulated a health history that needed special issuance evaluation, discovered that re-entering the system after a gap was meaningfully more complicated than it had been when they left. Some of them bought airplanes before the medical conversation was fully resolved. Some resolved the medical initially and then ran into recertification questions at the first or second renewal. And some discovered, after buying, that their conditions had progressed to a point where the path to maintaining a medical certificate had gotten genuinely uncertain. An aircraft owned by someone who can't fly it is an aircraft that needs to find a new owner. The third major profile in the 2022 buyer group is the business owner who treated the aircraft purchase as a combination of genuine utility tool and pandemic-era quality-of-life investment. These were buyers who had real, legitimate transportation needs, who looked at the general aviation market in 2022 and concluded that a good personal aircraft solved a genuine problem in their business or personal life, and who could absolutely afford the purchase price. They made the decision at a moment when their businesses were profitable, when interest rates were still relatively favorable, when the overall financial picture felt expansive and optimistic. And then 2023 happened, and 2024, and the economic environment changed in ways that affected their calculus meaningfully, even if it didn't necessarily change their ability to pay for the airplane in any absolute sense. This is a subtler story than it might sound. These aren't people who went broke. These are people whose financial priorities realigned as the environment shifted. The business owner who bought a Bonanza or a Cirrus in 2022 because the profit picture was strong and the sense of possibility felt wide open is a different buyer when the same business is navigating margin pressure, higher borrowing costs, a tighter labor market, or a shift in their industry that demands capital attention in ways it didn't before. An airplane that felt like a sensible investment in the upswing feels like a luxury line item that's harder to defend in a different business moment, even if the owner could technically still afford it. These are the sellers who often aren't distressed in the technical financial sense, but who have quietly reclassified the airplane from essential asset to non-essential expense and are now looking for the right moment to exit without taking a bath on the transaction. Now let's talk about what the exit actually looks like, because this is where the story gets really interesting from a market mechanics perspective. The sellers who bought in 2022 are facing a used aircraft market that is substantially different from the one they bought into. The same conditions that made their purchase feel almost urgent back then, the multiple competing offers, the prices running above traditional book values, the buyers waiting in line for anything decent that came to market, those conditions have cooled, not collapsed, not fallen off a cliff, but cooled meaningfully. The inventory of used aircraft available for sale has grown steadily from its pandemic lows, as exactly this category of reluctant 2022 buyer has started working their way toward the exit. Supply has increased. Demand, while still present, has become more selective, more price-sensitive, and more patient. A buyer in today's used aircraft market knows they have options and time in a way that a buyer in 2022 simply did not. The result is that the 2022 buyer who decides to sell is discovering that the price they can get is not the price they paid, and the gap between what they paid and what they can get now is in many cases genuinely significant. This is not simply standard depreciation, though there is standard depreciation baked in. It's the unwinding of the pandemic premium that was embedded in their purchase price at the time they bought. Every buyer in 2022 who paid $120,000 for a 172, that in a normal market would have been a $90,000 airplane, is now discovering what that premium unwind actually looks like in practice when they're the seller rather than the buyer. The math is not comfortable for a lot of them. It's worth spending some time on the depreciation curve here, because aircraft don't depreciate like cars and people, who come into aircraft ownership from a car-buying background sometimes have to learn this the hard way. A car typically depreciates sharply and predictably, with the steepest drop happening in the first year or two, and then leveling off to a more gradual curve. Aircraft are not like that, particularly in the piston single-engine segment that dominated 2022 purchases. Certified piston aircraft can and do hold their value reasonably well over long time horizons, and there are plenty of examples of airplanes from the 1970s that are still trading at real, meaningful values decades after they were built. But that long-term value stability is built on a foundation of proper maintenance, complete logbooks, a clean airframe, and a market that's healthy enough to produce real buyers. A buyer who paid a pandemic-inflated price in 2022 is not insulated from that premium deflating, even if the underlying aircraft holds its baseline value well. Think of it this way. If the fair market value of a specific 172 in a normal market is $90,000, and the buyer paid $115,000 in the heat of 2022, and the market has now returned to something closer to normal, the seller is looking at a realized loss of $25,000 that has nothing to do with what happened to the airplane itself, and everything to do with what happened to the market conditions that surrounded the purchase. The airplane might be in excellent shape. It might have added hours in a completely appropriate and value-neutral way. It might have a fresh annual and a new set of tires. None of that closes the gap between what was paid at the peak and what the market will bear right now. This is the specific financial pain point that is turning the 2022 buying wave into a 2024 and 2025 selling wave, and it's producing a market where a meaningful volume of relatively low-time, well-maintained used aircraft are coming to market simultaneously, each seller hoping to get close enough to what they paid to make the exit bearable. Let's talk about the maintenance reality, because it's a critical part of why the selling is accelerating beyond just the financial math. Aircraft ownership has a maintenance learning curve that is genuinely steep, and it's a curve that a lot of the 2022 buyers hit hard in their second and third year of ownership. The first annual inspection on a newly purchased aircraft is often the moment when the romantic vision of ownership meets the operational reality most directly. First annuals on a newly purchased aircraft tend to be expensive, because an honest shop does a thorough inspection of everything, and an honest inspection of anything that's been sitting or that has a prior maintenance history finds things. Squawks, deferred items, airworthiness directives that are due or approaching, hoses that are within service life but haven't been changed in a while, and a careful mechanic wants to note. Items that were borderline acceptable at the pre-purchase inspection and have crossed a line in the months of ownership that followed. A new owner who budgeted $800 for their first annual and received an invoice for $4,214 has experienced a specific kind of aviation education that no amount of ground school prepares you for. That education tends to repeat itself in various forms throughout the ownership experience because aircraft are complex mechanical systems operating in a demanding environment, and the maintenance cost variability is genuinely wide. You can have 3 annuals in a row that cost almost nothing, and then an annual that requires an engine borescope that reveals corrosion in a cylinder, that requires a cylinder replacement that turns a routine inspection into a $4,000 event that nobody planned for. Planning financially for that variability is something experienced owners do as second nature, because they've been burned by not planning for it. It's something a 2022 first-time buyer often learns the hard way. The maintenance cost story gets compounded for the 2022 buyer cohort in a specific way related to when they entered the market. Many of these buyers purchased aircraft that were approaching their next major scheduled event, whether that was an engine overhaul, a major avionics upgrade for ADS-B compliance that had already been done but paid for in the price, or some other significant interval-based maintenance item. A buyer in 2022 who purchased an aircraft with the engine at 1,200 hours and a TBO of 2,000 hours bought an aircraft that is now, 2 years later, significantly closer to the overhaul decision than it was at purchase. Engine overhaul is one of the most significant financial events in piston aircraft ownership, often running between $20,000 and $40,000 or more, depending on the engine type, the shop, and what's found during the process. A buyer who hadn't fully internalized what that approaching overhaul meant for their near-term financial picture is now looking at it directly and making a calculation about whether they want to invest that money into a continued ownership experience, or whether they want to sell before the overhaul and let the next owner deal with the hour counting. This is actually one of the more reliable signals that an aircraft is being sold for motivational reasons rather than mechanical ones. A well-maintained aircraft with an engine approaching TBO that's being sold by a private owner rather than a dealer priced accurately, with all the logbooks present, is almost always an airplane where the seller has done the math and decided that funding the overhaul and continuing to own isn't the right decision for their situation right now. It doesn't mean the airplane is a bad purchase. In fact, properly priced for the engine time, it can be an excellent purchase for a buyer who wants a known quantity airframe at a number that reflects the approaching overhaul cost. But it is a window into the seller's motivation, and for the 2022 cohort specifically, a significant number of these approaching TBO situations are landing right now, which is part of what's producing the current supply picture in certain aircraft categories. Let's talk about insurance, because the insurance story for the 2022 buyers is not the same as it was at the point of purchase, and the change has been dramatic enough for some of them to represent a direct financial shock to the ownership equation. The general aviation insurance market has moved meaningfully over the last several years. Underwriters who were already cautious about low-time private pilots in personally owned aircraft got more cautious, not less, as accident data came in from the surge of new pilot activity. Loss ratios in general aviation have been unfavorable for certain pilot profiles and aircraft categories, and the insurance market's response to unfavorable loss ratios is always the same. Premiums go up, coverage requirements tighten, and some underwriters exit the market entirely, which reduces competition and pushes prices even further. A buyer who insured their aircraft in early 2022 at a premium that felt uncomfortable but manageable has watched that premium renew meaningfully higher at the 1-year mark, again at the 2-year mark, and in some categories they've received non-renewal notices that required finding entirely new coverage at rates that made the original uncomfortable premium look pleasant by comparison. For low-time pilots flying higher performance aircraft, this dynamic has been particularly acute. A pilot with 300 total hours who bought a retractable gear, complex single-engine aircraft in 2022 is a profile that underwriters have gotten more conservative about, not less, over the subsequent years. Requirements around minimum hours in type, mandatory recurrent training, instrument currency, and sometimes hull value limits have all tightened in ways that add cost and friction to what was already a significant annual expense. A pilot in that situation who's also seen their flying hours trail off from their projected rate, whose insurance premium just renewed at a number that's materially higher than the year before, and who's now getting the first pre-purchase inspection on a potential engine situation, is running a very different ownership calculation than the one they ran when they signed the purchase agreement. The insurance situation has also affected the 2022 sellers in their role as sellers, not just as owners. Aircraft that are being listed for sale need to be disclosed accurately in terms of their insurance history, and buyers seeking coverage on a purchase will find that underwriters ask pointed questions about the aircraft's history and the buyer's profile. A buyer stepping into a lively used aircraft market in 2024 or 2025 with a fresh private certificate and modest hours is going to have the same insurance conversation that the original 2022 buyer had, and in some cases an even harder one, because the market has only moved in one direction. This is relevant for sellers because it means the pool of buyers who can actually get the aircraft insured for their specific ownership and flying plan is not as wide as the pool of people who can theoretically afford the airplane, and that discrepancy shows up in how quickly aircraft actually close versus how many inquiries they generate. Now let's talk about the financing piece, because interest rates are a non-trivial part of this story. A buyer who financed an aircraft purchase in early 2022 did so at interest rates that look almost quaint from the perspective of what followed. Rates on aircraft financing were in a range that made monthly payments on a $100,000 aircraft purchase genuinely manageable for a professional or small business owner with good credit. Then rates moved, substantially and quickly, and while existing loans with fixed rates weren't affected directly, the financial environment around the loan changed. Variable rate loans repriced. The notional cost of capital changed for business owners who were mentally accounting for what their dollars could earn or what they were paying to borrow elsewhere in their businesses. And prospective buyers looking at a refinance or a sale scenario discovered that the financing landscape for any replacement purchase or any buyer acquiring their aircraft was now meaningfully different than it was at the time of the original transaction. The interest rate shift has had a particular effect on the business owner-buyer segment, and it's worth being specific about why. A business owner who bought an aircraft in 2022 and was running it as a business asset, depreciating it through bonus depreciation rules or Section 179 treatment, has a specific tax and financial planning picture that interacts with both the cost of ownership and the decision to sell in ways that a purely personal buyer doesn't have to think about. The bonus depreciation rules that made business aircraft purchases particularly attractive in certain years have changed, the overall tax planning environment for business owners has shifted, and the combination of higher interest rates, tighter margins in some business sectors, and different depreciation treatment is producing a genuine recalculation among the business owner cohort that shows up as for sale listings. There's also a utilization dimension to the business owner story that deserves attention. The aircraft as business tool purchase in 2022 was often premised on a specific vision of how frequently and how purposefully the aircraft would be used. A business owner who planned to fly between regional offices or to visit clients or to attend conferences, doing 40, 50, 60 hours of business flying per year, has a completely different ownership cost equation than one who discovered that business travel patterns changed, that clients were increasingly comfortable with video calls for meetings that used to require a flight, that the business itself shifted direction in ways that reduced the geographic range of its customer relationships, or simply that the time it takes to own and fly personally conflicted more with other business demands than anticipated. When the utilization number drops from 50 hours per year to 18, the ownership math that was marginal at 50 hours becomes actively uncomfortable at 18, and the decision to sell starts looking much more sensible than the decision to keep funding a hangar queen. Let's spend some time on the geographic and lifestyle reality of aircraft ownership, because there's a dimension here that doesn't get enough attention in conversations about why people sell. Aircraft ownership has a very specific dependence on proximity and access that people who haven't owned sometimes underestimate. Your airplane needs to be hangared or tied down at an airport that is actually accessible to you in a way that's integrated into your actual life rather than requiring a special trip. The dream version of aircraft ownership involves the airplane being a convenient addition to your lifestyle, something you walk out to on a Saturday morning, pre-flighted in 20 minutes, and used to go somewhere that would have taken 3 hours by car. The reality of aircraft ownership often involves an airport that's 30 minutes from your house, which means the total time cost of a flying day is significantly higher than just the flight time itself, and that total time cost competes directly with every other thing you could be doing with your weekend. This isn't a complaint about airports being in the wrong place. It's just the reality that the lifestyle match between aircraft ownership and someone's actual schedule and living situation is more specific than people sometimes calculate in advance. Buyers who moved to a city during the pandemic, or moved away from one, buyers whose driving distance to their home airport changed, buyers who discovered that their local airport lacked the services or fuel availability they needed, buyers who found out their home airport's tower hours didn't align with when they actually wanted to fly. These are people who discovered that the practical logistics of ownership were more constraining than the abstract plan allowed for. There's a related story around family dynamics and aircraft ownership that comes up frequently among the 2022 sellers when you actually talk to them. Flying as a solo hobby and flying as a family activity are genuinely different things, and some buyers who anticipated that their spouse or partner and children would become enthusiastic participants in the flying life discovered that the reality was more complicated. A partner who's mildly nervous about small aircraft and agreed in principle to the purchase in 2022 might have an entirely different perspective after one uncomfortable flight through light turbulence or after watching the bank statements for 18 months. Children who seemed like eager future passengers might have discovered that small aircraft aren't as comfortable or as interesting for them as their parent had hoped. Family aviation is genuinely wonderful when it works, and genuinely fraught when it doesn't. And when it doesn't, the airplane starts being a source of marital or family friction rather than a shared enthusiasm, which has a specific and predictable effect on how long the ownership continues. Now let's talk about what the for sale listings actually look like, and what a buyer in today's market should understand when they're looking at the 2022 cohort of sellers. The honest reality is that much of this inventory is genuinely excellent. A pilot who bought in 2022 flew 160 hours over 2 years, kept up with maintenance, put the airplane in a hangar, and is now selling for the reasons we've discussed, is offering something real to the market. A relatively low-time, well-documented, properly maintained aircraft with a known 2-year ownership history and a seller who has personal knowledge of exactly how the aircraft was operated. That's a better starting point for due diligence than many used aircraft offer. And a buyer who understands the market dynamics can sometimes get that quality of aircraft at a price that reflects the pandemic premium unwinding, without the underlying aircraft having any actual problems that justify the reduced price. The things to look for when evaluating a 2022 cohort seller go beyond the standard pre-purchase inspection checklist, though you absolutely need a thorough pre-purchase inspection and you should never skip it. You want to understand specifically why the sale is happening, not in a suspicious sense, but in a practical one, because the reason tells you a lot about what else you need to know. A seller who's transparent about flying less than planned and finding the fixed costs hard to justify is giving you useful information about the aircraft's maintenance history. It's probably been sitting more than it flew, which means you want to pay specific attention to things that degrade with time rather than with flight hours. Rubber and fuel system components, battery condition, corrosion in areas where moisture can collect, fuel system integrity. An aircraft that sat in a hangar for 18 months with minimal flights might look great on the tach and less great on a careful physical inspection, and understanding which you're dealing with requires knowing what the actual usage pattern was, rather than just reading the logbook hours. The seller who's moving because of the approaching engine overhaul requires a different kind of investigation. You want to understand the engine's condition specific to its current state, not just its hours. And the best way to do that is a compression check that tells you what you need to know about ring and valve condition right now, combined with an oil analysis history that shows you the trend of metal coming out of the engine over its recent operating history. Hours to TBO is a planning number, not a condition number, and two engines at 1,200 hours to a 2,000-hour TBO can be in completely different condition depending on how they were operated, how regularly they flew, and what the oil analysis trend looks like. An experienced A&P who specializes in this type of aircraft and engine is worth far more than their hourly rate when you're making this assessment, because the difference between an engine that has 300 reasonable hours left on it and one that needs immediate attention is exactly the kind of thing that doesn't show up obviously in a visual inspection, but absolutely shows up to a trained eye with the right tools. The seller who's selling for insurance reasons is a specific case worth knowing how to identify, because they may or may not be fully transparent about it. If a seller mentions that their insurance premium became unmanageable, or that they had difficulty renewing coverage, or that an underwriter required training they weren't willing to complete, those are signals worth following up on. It doesn't mean the airplane has a problem. It means the ownership profile had a problem, and you need to make sure your ownership profile doesn't have the same problem before you complete the purchase. A pilot with 500 hours of complex time stepping into an airplane that a 200-hour pilot couldn't get affordable insurance for might find the same airplane completely insurable at entirely reasonable rates. But you need to know the history and make that assessment before you buy, not after. The business owner-seller unwinding a tax planning strategy requires the most careful due diligence of all, not because the aircraft is more likely to have problems, but because the documentation situation can be more complicated. Aircraft used primarily for business purposes under specific tax treatments may have ownership structures, maintenance documentation practices, and usage record-keeping that differs from a straightforward personal ownership situation. You want to make sure all the relevant documentation is present and transferable, that any business entity ownership structure doesn't create complications in the title transfer, and that there are no liens or financing instruments attached to the aircraft that need to be resolved as part of the sale. An aircraft title search through the FAA registry is something you always do as a buyer, but it's especially worth verifying carefully in a business ownership context. Let's step back and look at what this wave of 2022 sellers means for the broader used aircraft market over the next 2 to 3 years, because this story isn't over. The inventory pressure is real, but it's not uniformly distributed. Different aircraft categories are feeling it differently, based on who the typical 2022 buyer was in each segment. The four-seat piston singles, the Cessna 172s, and Piper Archers and Diamonds and Comanches of the world, the core of the used GA market, are seeing the most inventory pressure, because this is where the first-time owner and the returning pilot buyer concentrated their purchases most heavily. The supply of well-maintained low-time examples in this category has grown measurably, and the multiple competing offers dynamic that characterized 2021 and 2022 purchases in this segment is genuinely gone. Buyers have room to breathe, room to be selective, room to walk away from a deal that isn't right, and find another one within a few weeks. This is good news for buyers and sobering news for the 2022 sellers who were hoping the market stayed hot long enough for them to exit close to what they paid. It won't, for most of them, and the ones who are already accepting that reality and pricing accordingly are the ones who are closing sales. The sellers who are still holding out for their 2022 purchase price are the ones generating the listings that sit on controller and trade a plane for weeks without an offer, because the market has voted with its feet, and the vote came in below what they paid. The higher performance piston singles, the Moonies, the Bonanzas, the higher-end Cirrus SR22s are in a somewhat different position. The 2022 buyer in this segment was generally further along in their flying career and their financial profile, which means slightly different reasons for selling and sometimes a slightly different financial flexibility around the exit price. But the same fundamental dynamic applies. Pandemic-era prices are not being replicated in today's market, and a buyer in this category also has meaningfully more options than they did 2 years ago, which means sellers who want to move their aircraft quickly need to price with the current market rather than the market they bought into. The light sport and ultralight segment has an additional wrinkle layered on top of the 2022 buyer dynamics, which is the regulatory change we mentioned earlier. The expansion of sport pilot privileges under the newer rules has changed the competitive landscape for used light sport aircraft specifically, because a buyer who in 2022 might have bought a purpose-built LSA as the only legal option under their certificate is now looking at a wider universe of used certified aircraft as an alternative. This is genuine additional supply-side pressure on the light sport used market from a direction that has nothing to do with the 2022 buying wave itself, and the combined effect of the 2022 sellers plus the expanded competitive universe for buyers is producing a market that's particularly challenging for anyone trying to sell a used light sport aircraft at the price they paid 2 or 3 years ago. There's an interesting secondary market effect happening within the flight training community that's worth acknowledging here. Flight schools that have been running aging fleets are finding, in some cases, that the 2022 buyer cohort is producing a useful stream of relatively recent, well-maintained aircraft at prices that have come down from pandemic peaks. A flight school that couldn't justify paying $120,000 for a training 172 in 2022 is having a different conversation now about the same quality of aircraft when the seller, a 2022 buyer who never really used the airplane for training purposes but kept it in good shape, and is now priced closer to $100,000 or below, is sitting in the chair across the table. This is one of the better outcomes from the 2022 wave for the industry broadly. Some of those aircraft are finding their way into training fleets where they'll accumulate hours doing the thing that piston training aircraft were built to do, which is produce pilots. Let's talk for a moment about what the 2022 selling wave means for the manufacturers and what they're observing in real time, because this feeds into broader production and pricing conversations that affect the whole industry. Manufacturers of new piston aircraft pay close attention to the used market, because the used market is their primary competition for first-time and stepping-up buyers. A used 172 at a competitive price point doesn't just divert one sale away from Cessna. It shapes the entire mental model of what an airplane costs that a generation of new buyers brings to the market. When the used market is tight and expensive, buyers who've been outpriced on the used side sometimes make the jump to new. When the used market softens and offers more options at more attractive prices, the case for buying new has to be made more compellingly, and that case almost always runs through certification, warranty, configuration specificity, and the ability to order exactly what you want, rather than finding the closest match in the existing fleet. The manufacturers have been watching the 2022 seller wave develop with the same attention you'd expect. Their order books, which were genuinely full during the peak years, have moderated, and the waiting time for certain models has compressed from the 18 or 24-month horizons that characterize the peak to something closer to normal lead times or, in some cases, inventory that's available for near-term delivery. This moderation is partly a demand shift and partly a deliberate production expansion that ramped up in response to the peak year backlog, and the combination of the two is producing a new aircraft market that looks a bit more buyer-friendly than it has in several years, even as prices have continued to climb at the absolute level. What the manufacturers are counting on, and it's not an unreasonable bet, is that the pilot population continues to grow, that the returning pilot wave produces lasting additions to the certificated population, and that the improvements in avionics, engine technology, and pilot assistance systems keep pulling buyers into ownership who might have been more hesitant with older technology. There's a genuine argument to be made that the current generation of glass panel aircraft with envelope protection and integrated autopilot systems meaningfully reduces the risk profile of personal aircraft ownership in ways that should, over time, produce a more favorable insurance picture and a wider addressable buyer pool. That argument is real. Whether it plays out on the timeline the manufacturers need it to play out on is a separate question, but the direction is probably right. What the manufacturers are more quietly worried about, and what you can see in their various pilot development and flight school support initiatives, is whether the 2022 wave of new pilots who had a difficult ownership experience comes away from it with a lasting disillusionment with general aviation, or whether it comes away with a more accurate understanding of what ownership requires and a path back to the cockpit that doesn't involve buying another aircraft immediately. An owner who had a hard 2022 through 2024 experience with aircraft ownership and now sells isn't necessarily lost to aviation forever. They might be a future flight club member, a fractional share participant, a renewed interest in renting. They might come back to ownership in 5 years with a much clearer picture of what it actually costs and requires, and be a much better prepared buyer at that point. Or they might have had enough of the financial stress and the logistical complexity and the insurance anxiety and the maintenance surprises and walk away from general aviation in a more lasting way. Which of those outcomes dominates is something the industry is going to be